Whoa, whoa, whoa. Uh, 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 uh. Hold on, hold on. Jeez. Bruv. Properties. Samsung. Boom. Okay, maybe it was working the whole time. I don't know. I don't know, boy. What the fuck? Okay, so what I'm looking for right now is dum, 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 dum. For properties. Boom. Nice. Okay, okay, okay. Oh shit, I need to block that and put this there. Alright, alright. I've had a crazy day yesterday, but you know what, mate? I feel really, I feel like we are making good stead in life. Yeah. So I've been having issues with life, and nevertheless, everything else with work, trading, my work ethic. But a life update is that we are now feeling more dangerous. Okay, so I'm analyzing. I'm involved with my community more, and I've been analyzing like what what my edge is in life. Yeah, and because I'm getting involved with boxing, and I'm about to start actually getting in fights more. I'm looking at everything in a more fight perspective. Okay, and I just see people who I don't like particularly, and I'm ready to put them down now. I wish I was more ready back in the day, but we've got that Joe Rogan influence of getting into some sort of fighting sport, and you know it's this sort of thing where you go through experience and you can't tell people the experiences you've gone through. But then when you are prepared with fighting skills or something, it sort of tells your story without actually speaking words. So you're able to actually throw punches, and people are like, this guy has been through something. This guy has put himself in the ring for whatever reason. And so that's how I'm looking at things now. I'm thinking, if I'm in the ring when I meet someone, then you're already gonna be carefully speaking to me, It's not just a straight in friendly vibe or whatever. So yeah, just looking at everything a little bit differently at the moment. I think there's a lot of pain and suffering that needs to be like mitigated. It's interesting. I highly recommend people to get involved with their communities and stuff because, oh my god, the things you learn. Like, you've already been through some madness and then you get involved with like some other motherfuckers who are sort of like sparring with you, like mentally, and you're able to sort of like analyze, like, okay, this is the type of people they are, this is who you are, and you want to see that like kinetic energy, that explosion, that spark, the fight, and so prove yourself that you're more than just a pushover, you know. Like, especially for people who are quite funny, you know. Um, I've come across so many people who are like funny, but then they're like insane, and it's like you can't manage them. They can't manage themselves properly. Like, I used to be like that. I think everyone who's been funny used to be like that. I'm not actually sure, but I used to be like that, and even now I'm still like kind of manic in that sense as well. But the thing is that when people don't see that, you know, the craziness has been sort of mitigated, or it's been like managed so that you're like on top of your insanity a little bit, to the point where, like, you know, you're being funny, but people can't see that you're holding yourself back. You know, and if people are like being so crazy and they're not holding themselves back, or they're being so crazy and they're holding themselves back, you know, you're coming across like bullies, you know. So you need to really like get in your best sort of evolution to actually start fighting people, actually make a difference in this world, as opposed to just letting the alpha male fucking run whatever the fuck you're wanting to be involved with.
Before you proceed with this lesson, please make sure that you take note of this big red bold text that we have right here. Do not mark this lesson as complete.
We've watched this.
Alright, let's go. Now, let's apply whatever we have learned so far onto the charts. This is the best part. Alright, let's go. So when we come onto the chart just like this, you can see price has been creating lower highs, lower lows, and then price created a bearish break of structure to the downside.
I just want to say I'm super fucking hungry right now.
It was the last time we saw the bears in action, right before demand stepped into the market and overpowered supply, causing price to go all the way up there and closing above the last lower high and giving us our market shift. So right now we are pretty much bullish, right? And after a market shift, remember, we are expecting price to start pulling back, right, to any one of the demand zones that we have within this period. Okay, so based on this, you can actually start drawing up your point of interest. So at this point of time, you can see most recent point of interest would be this one right here, where price push up, pull back, and then go even further. So this entire consolidation, you can mark that up as your 4-hour demand. Alright, once again, just box this entire consolidation up right there for our demand. If you were to refine it, right, it will be this pivot candle right here. No, but this one did not close below the low, so potentially it could be this one right here. Okay, you can see this has been somewhat been mitigated as well, so it is still valid, right? But you know, we'll see whether it works or not. And then based on this, there's another zone right there. Okay, this entire zone. This, if you go down to the lower time frame, you'll see that price pretty much goes up, pull back, and then goes up even higher. Once again, this zone has been mitigated as well, right? Multiple times as well. So we'll see whether it works or not. But just drawing up all the point of interest that we can see on our naked eyes right now. So just put it up there. Demand zone. If you were to refine this, it will be this candle right there. Just refine this. And then there's, of course, there's our extreme one right there. This entire consolidation here as well, and just drag that out as well. Okay, so this point of interest, this one, and then for the extreme, I believe we have an extreme demand zone here as well. Actually, you can see this entire consolidation here, right? Yeah, you can see this entire consolidation, and then price finally break out, right? This is just like a large, yeah, just like a big ass demand range on its own. But based on this, let's just refine it to, let's say, okay, it'll be right here then. Yep. Okay, it's cool. We got our multiple demand zones. You can see this is why you guys need to really understand how to actually select your point of interest correctly and really identify the highest priority point of interest. Now, once you've dropped all your point of interest, your next step is to really think about what are the confluences that are backing up each of these point of interest. Did it sweep liquidity? Did it cause some sort of supply to demand flip? Right? Is it part of a demand chain? Yeah, basically, is it pro trend? Is it counter trend? You know, all of these confluences you have to ask yourself, right? So based on this, if I look towards the left hand side right here, what we do have was a supply zone right there, right? So that is our supply zone that caused this low high to be formed. And if you drag it to the right hand side, you will see that price actually did react from this supply zone, came down here, and then go up there, right? So in this case, this was a failed reaction, because if this supply zone were to do the job, price will go down there and take out this low, which did not happen. So in that case, there was a failed reaction, there was a flip right here. So this is pretty much your flip zone, right? So I'll change this to flip zone. All right, you can see we are already trying to increase the probability of the zone. Okay, so I'll put it as the 4 flip zone. This one right here, this one, yes, this is also a flip as well, right? If you look at this, what happened was that there was actually another supply zone right here. Using your fractal refinement, you can see what happened is that price actually, they came down, but it wasn't a straight push like this. It actually did this, pull back a little bit before going on even further. So based on this, this was in fact another supply zone right there. Okay, so just to refine it to this candle right there, drag it up, you can see this was a flip where price reacted from this supply zone, and then came down here, failed reaction once again, and then before going up even further. So this was also a flip. Okay, cool. So now we got 2 flip zones. So okay, I'm just gonna get rid of this because this is irrelevant right now. And then based on this, you can see that price actually, yeah, utilize this supply zone as a reaction to facilitate that pullback, and right now price is all the way up there. Okay, cool. So based on this, what about this? What other confluences is backing up this zone that we have right here? Now, if you look at this zone, I'll say there's a little bit of liquidity sweep right here, where price actually came down here, pull back, and then goes down there, sweep available liquidity from this high before going up even further. So that was a liquidity sweep by itself. Okay, cool. So we got a liquidity sweep at this zone.
Really don't like this, but don't have a choice. The sweep available liquidity. Fuck. Yeah, fair enough.
And then was there any sort of flip at this zone? Not really, not particularly, no. If you look towards the left, not really any supply to demand flip. Okay, so based on this, okay, then the extreme zone. Honestly, the extreme zone is quite less likely that price is going to come down to this extreme zone here, because like I said, when you encounter the first market shift, right, the first trend change, price will more often not make like a minor pullback and just goes. It doesn't make like a deep pullback just like this. And also in this case, right, price has in fact already mitigated this demand zone here and then goes up even further. You can see it mitigated the demand zone, came up here, and it just have been just continuously creating higher highs and higher lows. So it's very less likely that price is actually gonna come all the way down here, right? But we'll just leave that on and see what price does. Okay, so if not, then that is it. And if you are trying to look at the inducements, right, what we have right here is that when price is going up like this, it was not a straight up push, right? You can see it was not a straight up push. It was actually price actually come down here. Okay, this liquidity has been swept, so we can just put it aside. But over here, within this up move, price goes up, pull back, goes up, pull back, and then goes up. So there's available liquidity being built up below these lows right there, and also below these lows that we have right there. So we can put it up as our inducements as well. Okay, mixing up a little bit of liquidity concepts right now. So if you don't understand what is this, like I said, come back and rewatch this after the liquidity concepts course, right? But basically below every swing low, just like this, there's going to be available liquidity. All right, so right now, based on this, I see that it's liquidity being available below these lows right there. So we could potentially see price come down there, sweep the available liquidity that we have on this left hand side during this push phase before going up even further, right? So that is something that I have in mind. All right, cool. So now that we have really like added more confluences to the point of interest, we can see that in fact this seems like a high probability point of interest. All of this seems like a high probability point of interest that we want to be trading from, right? And our next job is just to wait for price to actually get to either one of this point of interest, show us our entry model, right? Which means I want to see the internal structure turn bullish, right? And then that is when I can look for my entry, right? So you can see price start pulling back. Okay, price starts pulling back, nice. Okay, and then it went up even higher. In this case, once again, what is price doing? This is just an internal pullback. This is not considered as a swing pullback whatsoever because it's very minor, right? In this case, guess what? We have liquidity being built up below these lows as well. Because what happens is that a lot of retail traders, when they see price creating high highs and high lows, they enter for a new buy position right there. They place their stop loss at these last higher lows, right? And that is when, you know, there's going to be liquidity right there. And then that is where you can see when price actually started pulling back. Okay, starting pulling back right now. Okay, so this is when we can potentially get our fractal market shift to the downside right here. Potentially we got a fractal market shift to the downside. Just to adjust this to this inside bar candle, cannot put it right there. Okay, cool, we got a fractal market shift to the downside. This is when we know that the internal structure is going to start pulling back. And right now we are using a 4-hour time frame. And we are going to be trading 4-hour zones, and we're going to be using 15-minute time frame to look for our entries, right? So based on this fractal market shift, we can expect our internal structure to start pulling back to this last higher low right here. And until this last higher low gets broken, we are still not going to start the swing pullback yet. So I need to see that get broken. So yeah, you can see right there, see fractal market shift. That's why I often say fractal market shift is very aggressive, right? Or it just tell you that there's a internal structure pullback. And in this case, there's actually a liquidity sweep right there, right? So if I just draw this up, there's actually a liquidity sweep right there. The price actually came down, sweep the available liquidity below this swing low before going up. So based on this alone, right, you can actually draw another demand zone right here. Or if I were to refine it to this candle right there, yeah, this would be my demand zone that also swept available liquidity. Okay, so now let's see what price does. Price range come down here. Okay, so my last higher low will be this one right here. So if I were to draw my, like, let's say last higher low, internal structure higher low on the 15-minute time frame, this will definitely be the last higher low. So I'll put that out as my 15-minute internal strong internal low. Yep, right there. And then if I see that get taken out right there, then that is when I can actually see that market shift and price is potentially going to pull back to either one of these zones right here. So if you go down to the 15-minute time frame, you can see, yep, this is the strong internal low right there. I'll argue that that's actually a 15-minute strong swing low, but okay, whatever. Okay, you can see, yeah, this is definitely the strong swing low on a 15-minute time frame. Okay, so I'll just put that there, right there, and then this is a weak swing high on a 15-minute time frame. Okay, so I want to see this low get taken out, and then that tell me that the market shift has happened, and that is when I can anticipate price to start pulling back. Okay, you can see price playing around here, right? Once again, you can trade all of this by all means, go ahead and trade all of those. But right now, I really want to see price pull back into this point of interest to really show you guys the lesson, right? Okay, so this is when price actually break through the last 15-minute strong swing high and swing low. That is when we get a market shift, since price has broke through the last internal higher low. So got that market shift right there. Okay, cool. So this is when price is gonna turn bearish to facilitate that pullback, right? So based on this is where I can actually mark up my new 4-hour strong high, week high, yeah, 4-hour week high right there. So right now we're playing within this range. As long as price has not break past this low whatsoever, we are still bullish. That means price can pull back to any area right here, any point of interest right here. As long as it does not break past this low, we are still bullish. Alright. So now price is gonna pull back. You can see price has turned bearish to facilitate that pullback, right? Come down here, creating this lower high, and then starts going down even further. So based on this is also a flip zone. Flip zone, you can see this is a supply flip zone right there. But we are just gonna be focused on the pro trend movements, right? Which means we are gonna be focusing on the demand zones, right? So in this case, in this entire thing, right, if you draw this from this swing low all the way up here to the swing high right there, right, so you draw a premium discount to from swing high to the swing low right there, drag it all the way down here, and then you see, ideally we want to buy from the demand zones that is within the discount pricing, right? So right here, this demand zone, most likely we have seen that it doesn't work, most likely because it's a low probability zone that is within the discount pricing, right? Even though it's swept liquidity, it is a valid zone, but it did not work because price is most likely in a discount pricing and it's quite overextended, right? A long swing pullback is due, right? That is why price started pulling back more significantly. So yeah, we can just get rid of that first point of interest that we have right there. Okay, just delete that, and then right now we can expect price to pull back. And if you look at this point of interest that we have, I would say that if you mark up this entire range, then it is somewhat below the 50% EQ, but it's not going to be as high probability as this one right here, which is definitely within the discount pricing, right? So this one has a much more higher chance of actually working. So we'll see what price does. Okay, price eventually come down here. Okay, creating lower highs right here on the internal structure. Okay, you can see eventually came down here, breakthrough, creating your lower highs, lower lows, lower highs, low lows, right? And you can see it completely broken this area right here, right? You can see it just completely bypass it. And of course, course, there's going to be some sort of demand that step into the market and cause price to go up, potentially create a lower high before price goes down even further to make a deeper pullback, right? So based on this, you can see you can draw out your internal break of structure right here. Okay, internal break of structure. I am sure that there's going to be some nice opportunities that we can look for sell position right here within the counter trend. But like I said, we're just going to focus on trading the pro trend, right? So that I can really show you guys this POI selection thing. Okay, so based on this, price get into this zone, right? And it kind of disregarded it. Okay, so cool. Yeah, we can see it completely blow right past it. So this was good, but it didn't really do its job whatsoever. So I'll just get rid of that. Okay, cool. So based on this, right now price has entered into the 50% equilibrium, and this means that price could potentially turn right now. Price could potentially turn bullish and head up right now. Remember, the closer it gets to our extreme swing low that we have right here, the higher the probability of this pullback to be over and price turning to go up, turning bullish right now. But based on this right now, the internal structure is still bearish, right? We see price actually coming down here, creating your lower highs, lower lows, lower highs, lower lows. Okay, cool. Based on this, yeah. And then this is for this zone. You can see price has actually entered into this zone that we have right here, right? Which is good, since price have entered into this zone right there. Yeah, look at this. Price has officially entered into this zone. So, okay, now price has entered into this demand zone that is within my discount pricing. Now I'm intrigued, right? Because I know that price will potentially start to go up right now. The swing pullback could potentially be over. So that's when I can potentially drop down to my lower time frame and really look for my refined entries. So based on this, if I look at the lower time frame, I see that price is creating your lower highs, lower lows. Okay, I see that this will be the last lower high right there. So I'll put that as the last lower high. This will be my last internal, strong internal lower high right there. And then before price goes down there again, break structural. And you can see price reacted from this supply zone that we have right there and then goes down even further and causing another internal break of structure to the downside. Alright, so based on this will be my last, yeah, this will be the last internal lower high right there. Okay, cool. So this was pretty much the last internal lower high right there. And then later on, we actually got a break of structure to the downside once again. Right here, you can see this is a very minor internal break of structure, but it's still counted because price actually started pulling back, creating another lower high right there before it goes down even further. So based on this is actually my last internal lower high. Okay, this will be the last internal lower high right there, which price has already been broke. Okay, no, not really. Have it closed above it yet? Not really. Yeah, but based on this will be the last internal lower high. And you can see right now price could potentially be breaking past it. Yeah, you can see I'm pretty sure it's going to close right there. So the minute price actually close above my last strong internal lower high, this is when that I will get my market shift, right? So this is where I know that this swing pullback is over, and that is when I can look for my trade, right? Where I'm able to get a fractal alignment where the lower time frame has turned bullish, my medium time frame and my higher time frame is all bullish, and right now everything is bullish, and that is when I can look for my entries. So based on this, right, you can see after this market shift, guess what? We are doing the same thing. If you recall what happened at the start, when we go up to the higher time frame, after this market shift is formed, what we did was that we identified the point of interest that created this market shift. Same thing. That's all we are doing on the lower time frame. Because remember, the markets are fractal, right? So if I look at this, okay, now after this market shift, I'm expecting price to start pulling back, right? So that is when I look for my point of interest within this area right here, and then I'll see there's an extreme area right here. Okay, I will consider this entire thing as just mark this entire thing up. Right, this will be the extreme demand zone, and if you look towards the left hand side right here, there was actually a supply zone right here, right? Supply zone that actually led to this internal break of structure to the downside. I'll just mark that as a 15-minute supply, and you can see price reacted from this 15-minute supply and could potentially cause a flip right there. Okay, that's not really a flip actually right here. Like, let's just see what price does. Okay, price comes down here. Yeah, I believe this is the flip right here. You can see right there. Price reacted from this supply zone failed to do its job and actually print a lower high. That is when we get our flip, right there. Yeah, so based on this is actually the flip. Right, once again, you can draw the entire thing or you can refine it to this candle right there. This would be my 15-minute flip zone. Alright, cool. So right now that's my 15-minute flip zone. I'll just go with this. And based on this, I got 2 points of interest to trade from. This extreme zone or my second point of interest that I have right there. Of course, you could refine it or you can mark up this entire flip zone. Doesn't really matter. I'm just going to refine it right there. So based on this, after this market shift, I want to enter on this flip, right? So that is when I will actually place my... Okay, actually, no, before that, I want to explain to you guys why I will enter on here on and not here instead. Based on this, like I said, you compare this zone, these two zones, and you ask yourself, what did this point of interest achieve? Okay, so if you look at this, all this did was that it caused price to break structure, right? And of course, there was a little bit of liquidity sweep right there. Actually, you can see there's liquidity sweep right there where price swept the available liquidity before going up even further. So there was caused a liquidity sweep and it caused the market shift. And what about this? This zone, it caused a market shift. Actually, no, it didn't cause a market shift. I believe it caused an internal break of structure to the upside. Yeah, right there. Okay. Did it close? Yeah, yeah, it kind of closed. Okay, cause, yeah, actually, this one I would, yeah, I can't really see this actually. Did it really close above it? It was like just nice, right? So it didn't really close. But potentially in the future, if it caused an internal break of structure, then this is a more valid zone, right? So based on this, what happened is that this flip zone, it caused supply to and demand flip, and it also swept available liquidity right here on the left hand side. So if we look at this, right, this is not just a flip zone. It is actually a flip plus sweep zone, where price actually come down here, flip, creating this low, before going down there, sweep the available liquidity from this low, and then goes up even further. So this was a flip plus sweep zone. And compare this to this zone right here, this is going to be much more higher probability, right? So let's say I place my buy order right there. Potentially you can place your stop loss below this low there, or below this area right here. Give you a little bit of breathing room, right? So just potentially right like this. Then you can target this last swing high or something if you want, or you can even target all the 4-hour swing high, right? Let's just see how this play out, right? Based on this. Okay, I'm still not tapped into the trade because price have not tapped in. Okay, yep, right there, I got tapped into the trade right here when price tapped into the flip zone. Okay, you can see you need to give your stop loss a little bit of breathing room. You cannot put it too tight, right? So this one, give you a little bit of breathing room right there. Okay, price tap you into the trade. Let's see how price does. Okay, nice, you got out. If you are targeting right here, but I'm not really interested in targeting this. I'm going to target the 4-hour swing high that we have right here. So if I zoom out a little bit, remember, when we get a fractal alignment, when we get the lower time frame, price tap you into the trade. Let's see how price does. Okay, nice, you got out. If you are targeting right here, but I'm not really interested in targeting this. I'm going to target the 4-hour swing high that we have right here. So if I zoom out a little bit, remember, when we get a fractal alignment, when we get the lower time frame, the medium time frame, and the higher time frame all aligned, right? That is when you can really target the wick swing high, because this is when we know that this entire 4-hour swing pullback, this entire pullback on the swing structure is over, and right now price is going to go up there and break past this high that we have. So that is when you can target all the way up here even, right? So this will be a 1:24 slow ratio trade, right, which is pretty insane, right? So based on this, yeah, I can see this one. If you target right there and you got out, that'll be nice, right? Because what happened is that price actually eventually it went down there and take the extreme point of interest that we have right there. So if you target right here, it'll be nice as well, right? What happens is that, let's say you do this and then you get out at this last high right here. Okay, cool. And then you can see eventually price actually come down there.
Bro, this is like hindsight fucking trading, mate. This is the issue that I've been having. But I've been thinking, just whilst we've been watching this, that if I get the backtest data and go over the previous week's data over the weekend on like a Sunday, then that means that we can like go into the new week with lots of recent data and just sort of like translate our knowledge into money, because we've got this knowledge and I don't know what to do with it anymore. I've gone insane. I'm putting so much fucking time into this shit just to fucking give up. Fuck off, mate. Fucking. So I just need to translate that knowledge into money, and the best way to do that is by getting backtest data and going over it on Sunday. And that means that we can get some W's. Oh my goodness.
Tap into this extreme demand zone. Yeah, because eventually price will actually take out this demand zone, and then you also sweep a little bit of available liquidity right there. Now, as you progress through these courses, and then you will really learn how to utilize liquidity so that you can prevent situations just like this, where if you place your stop loss too tight below the flip zone, you get stopped out right there, and yeah. As you progress through lessons, you learn how to avoid like losses just like this. But let's say in this case, you got in right there and then you got out at this last internal lower high. So this was the good 1:4 trade, and then later on price actually goes up there, and then it swept kind of available liquidity below here before coming down there, swept the available liquidity from these lows, right? And this is when we get that push inducement and pull inducements being swept right there, and that is when you can potentially get your second entry right right there at this extreme point of interest, stop loss below this zone, and that is when you can really target potentially this high right here, or even further all the way up there. Yeah, but later on you'll see that okay, price actually ended up going down even further, right? So this is interesting. So based on this, let's just say get out of this, and let's look at where price is gonna go next. Okay, price actually went down even further, because if you look towards the left hand side, what do you do? It's sweeping the available liquidity that we have on this swing low that is being created right there. If you drag this all the way down there, you can see it swept the available liquidity below this swing low, then goes up. That is why I always say, like, if you don't know how to spot the liquidity, then you are most likely the liquidity. That's when you actually take losses just like this, right? So you always really need to understand the higher time frame order flow and liquidity itself. So based on this, you can see this is the inducement being formed right here. So we can expect price to come down there, sweep the available liquidity below this inducement, and then go. And it also came into this zone, right? It came into this zone right here, right? Let's just see. Yeah, it actually came into this zone right there. Okay, let's just move things back a little bit. So based on this, price actually came on. Yeah, okay, did it actually tap into this or no? Okay, kind of did. It kind of tap into this zone that we have within this discount pricing. But most importantly, you can see that what happened right here, this is just pull inducement, right? Later on, you will learn about this, right? These are just pull inducements, where during the pullback phase, it actually created inducements, equal lows right there to bid all the retail traders to think that the reversal is, that the swing pullback is over. And then there is also another liquidity sweep from the push inducement. So this is actually a push and pull inducements sweep. Price came into this extreme zone, and that is when we can see price is most likely going to go up right now. And then you can see price has officially turned bullish, right? And then it came down here. Okay, so based on this, if you go down to the lower time frame once again, you can pretty much see the exact same thing as what happened just now. Right, what we have was this market shift right here. Okay, we got a market shift on this last lower high, and then when this market shift is formed, there's actually two zones. There's your extreme zone right there, so this is my extreme demand zone, and then there is also a flip zone right here, right? You can see this would be the flip zone. Price goes up, reacted from this supply that we have on the left hand side right there, creating a failed reaction before it goes up even further. So based on this, you can see these are the 2 points of interest, and for me, this zone would be much more better to trade from, because this zone did not just break structure, but it also caused a flip compared to this extreme zone that we have right here. Okay, so based on this, you can see this entire flip zone, and that is when you can potentially look for your entry once again at this flip zone. So once again, depends on where you want to enter. You want to enter the edge, the 50%, or the extreme end, completely up to you. Later on, you'll find out. And let's just say we enter on the edge right there, and yeah, we're pretty much into the trade, and then place a stop loss. You can either place it like below this zone, or like a few pips below it, and then you can target, let's say this high right there, this little last internal high that we have right here. Okay, price goes up. Potentially, you can see it's like tapping into this flip zone again, right? Just going sideways right now, and then eventually tap into this flip zone again, and that is when you can get out of the trade. Easy 1:3. Okay, cool. So based on this, zoom out a little bit. Where can I expect price to go next? That is when I expect price to come up to this last high that we have right here, right? Potentially right here, or yeah, if we look at this, yeah, this is the last lower high right there. So you can potentially expect price to go up to this last lower high right there. Right there, got that another. You can see this is a very nice trade, and then this is when you can potentially, yeah, you can see after this is pretty much smart money step into the market, and price is most likely going to come out to all the way up here to this extreme high already. Yeah, so that's basically your POI selection, right? So I hope that you guys have really understood like why is it so important to select your point of interest. Like I said earlier, right? Obviously, what you want is a point of interest that have a high probability of it working, and then you also need to really take into account liquidity as well. And all of this stuff you will learn later on, right? Later on in this classroom, that is when you will really learn about liquidity and all that stuff, and that is when you will start getting better, and it will really allow you to prevent some stupid losses, which you know that you should not have taken if you can just understand liquidity. And when you can understand liquidity, that is when really you're able to capture this large move just like this before they even happen. And just to wrap up the POI selection, really when we are selecting our point of interest, to keep things very, very simple, all you need is to really ask yourself, what has this point of interest achieved, right? So in this case, this point of interest caused a flip. Yes, you can see in this case, if you look at the point of interest that we have drawn earlier, right? We got one there, another one there, and then I think another one here, and another one here, right? So these were the 5 point of interest that we drawn earlier on. And which one did price actually respect? It respected this one right here. Why did it respect this one? And also, it actually kind of respect this one also right here. So it's arguably like this one and this one, you can see just like the middle of them. So why did price actually respect this 2 point of interest? Because this one right here is swept available liquidity. Okay, it caused a market shift. Now on the other hand, this one it was a flip zone right here, flip zone that also did swept liquidity or no? No, it was just a flip zone right there, and then there was liquidity being built up below all these lows that we have right here. All of these were inducements, and that caused price to come down there, swim all the available liquidity that we have on the left hand side, take out all of these inducements, take out this inducement even before it reversed and hit back up. Right, so you can see how this zone it had inducement being built up in front of it. It was a supply to demand flip zone. It caused the market shift, right? It caused a shift in structure, and it also kind of broke internal structure right here, right? You can see, and it's also okay. It's not really unmitigated. Yeah, but you can see it has multiple confluences. That's why it worked. All right. That's why this zone didn't really work as well, because this zone wasn't like really in the premium pricing, which is the last point I forgot to mention. This zone right here, it was also within the premium pricing. It was below the 50% equilibrium. That is why this zone works so well, right? In the end, you can see price actually went past this zone because it wanted to swim available liquidity towards the left hand side before going up even further. And once again, if you don't understand what I'm saying and you just think that I'm speaking gibberish right now, it's really because you don't really understand liquidity yet, which, like I said, I assure you, you will go through the liquidity concepts course, and then you will understand liquidity. And when you do, come back and rewatch this lesson over and over again and really think about how to select the correct.
Fuck. Hungry as fuck. Alright, so we're gonna finish this, and then I'm gonna have food and start my day.
Finally here, ladies and gents, this is when we really wrap up whatever we have learned so far on this entire course module on institutional zones. Right, so far, I believe that we have taught you a lot of things, and quite frankly, if you just think and keep things simple, it's really just 6 types of zones that you've learned. Your supply and demand zones, your flip zones, your order blocks, your sweep zones, flip your sweep zones, and also your trap zones. So really, there's only 6 types of zones that you've learned, right? So I know right now you might be trying to wrap your head around this entire thing, right? There's so many different types of zones to learn, but like I always say, when you get confused and overwhelmed, just always fall back to the most simple type of zone, and that is your supply and demand zone, right? These ones right here, supply and demand zones and your flip zones. You really need them. All you need is them to actually succeed in the markets, to be honest, right? You don't really need this extra stuff, but what is extra stuff is that it gives you more weapons in your arsenal, right? It gives you more tools in your arsenal to work with. It gives you more perspective to maneuver around, right? It gives you more angles to attack the market, right? So that when you know that, okay, if I see this, is it an order block or is it a supply and demand zone? If it's an order block, then it's most likely going to work, right? Compared to an ordinary supply and demand zone, right? So just gonna quickly wrap up this entire course module by just giving you a quick, I'll say like just a quick summary or like a quick recap on everything we have learned so far. First day we learned about supply and demand zones, and we know that in order for a supply and demand zone to be considered as institutional zone, it must break structure, right? We must get a break in structure. So in this case, we do get a break in structure, and in a bearish market structure, supply is in control. In a bullish market structure, demand is in control. So in this case right here, when we get the market shift, this tells us that price has came down here, right? And it caused this demand zone to fail. There's no reaction whatsoever, right? That is when we had our supply zone right there. Supply zone, that break structure, overpower demand, easy supply zone right there, and then we got our demand zone right here that caused that market shift and caused that supply zone to fail, right? So that is pretty much your supply and demand zone. And of course, we have learned that there is certain rules, right? We have a mechanical framework when it comes to drawing and identifying your supply and demand zones, right? Remember the framework that we use, remember the rules, and you really wouldn't go wrong, right? As long as you follow the rules, you will not go wrong whatsoever, and you will not get lost or confused. And then next, your flip zones. Your flip zones is where we learn about how, okay, in this case, we had price flipping from your demand to supply, because this demand zone failed to do its job and break past this last high, right? When that happened, we get a failed reaction right there, and that is when we can draw our supply flip zone right there. Okay, as simple as that. And yeah, like I say, when it comes to drawing these zones, you guys can either refine it to the pivot candle, or you can draw the entire zone up just like that. And really, it's all based on the concept of consolidation, initiation, right, and then mitigation, and then continuation. Yeah, wait, so it's range, initiation, mitigation, and continuation, right? That's the 4 phases of order flow, and that's just how the markets work. Yeah, you can see by really understanding the supply and demand, you really understand why why price move in the first place. And you will really realize that it's just a constant battle of supply and demand, the bulls and the bears fighting to see who can take control of the market. And on a demand flip zone just like this, we get price goes down, creating a supply zone just like this. And this supply zone failed to do its job, right? Failed to print that lower low, so that is when you get a failed reaction. That is when you can draw your demand to supply, your supply to demand flip zone or your demand flip zone in general. Yeah, that's pretty much your supply and demand zones and your flip zones. And obviously there was other stuff to it, and you just have to watch the lessons to actually learn about the other stuff, right? Learn about the intrinsics, the details about these supply demand zones and flip zones. Okay, and then next for order blocks, we learned that order blocks, they are basically areas where a large number of buy or sell orders are executed, and we said that order blocks and supply and demand zones, they are pretty much the same thing, just with slight differences. Example, order blocks, you have to meet the four criteria, right?
I actually think these lessons are like really fucking useful. Like as opposed to, I don't know. But these lessons right now are very good.
You must ensure that the pivot candle must close below or above the previous candle, low or high. And then you also, the order block must be fresh, must be unmitigated, and it must also cause a break of structure, and it also must have a gap, must cause some sort of imbalance in price, right? So for a zone to be considered as an order block, it has to fulfill all of these four criteria, not just one, but four of them. All right, and then we learned that, okay, in a bullish scenario, you just need to find like this sharp and substantial upward movement. In a bearish scenario, you just want to find this sharp and substantial downward price movement. And that is when you can draw your order block and refine it to the candle, right? This entire pivot candle that caused this sharp downward movement. Yeah, just find the candle right there. And yeah, we went through the rules, and really the only difference is the rules when it comes to identifying your valid order blocks. And also, order blocks are much more effective than supply and demand zones, all right? Always remember that, because always think about the psychology behind order blocks, right? So order blocks is named that way because, example, if today the smart money, the big financial institutions, the banks, whatever, right, they want to enter for a large amount of order. I'm talking about like $100 million worth of offer. So imagine this is a $100 million worth of offer. They're not gonna enter this into the market straight away, right? Because no one can fulfill this. So they're gonna split this into multiple orders, right? So they will have maybe 4 little $25 million orders, right? So in this case, each of these orders is actually order block, right? It's a large amount of order that is split into considerably still large little order blocks, right? Different blocks of orders. So that is when you see when an order block is created just like this. This is, let's say, $25 million, right? This is one time 25 million orders, right? So this is when smart money entered for the first $25 million worth of position right here at this price point, which caused this imbalance in price. And now we can expect price to pull back to this order block to fill up another $25 million in price, so that price will go up even higher, right? So that's really order blocks, right? It's basically different blocks of large orders, which is created by smart money. Yeah, so like I said, if you are confused about this, right, then I would advise don't even bother learning about this at all. Just stick to supply and demand zones, because they are pretty much the same thing, and the additional edge, the additional advantage that you gain by learning this is not really substantial enough to make this worth learning, right? If you're like a basic guy, right? Like if you're like a complete beginner, then just stick to supply and demand. And once you master this, then you can start progressing to this. But for now, please go and master your supply and demand zones and your flip zones before you move on to basically the other 4 zones, right? Yeah, just go and master the basic boring fundamentals first. Like I said, make sure you go and rewatch the lessons over and over again, and then go and mark them up on the charts, right? And you can do it with the walkthrough lessons, where I show you how I do it, and then you can check whether you did it correctly or not. Okay, that's for order blocks. And then last but not least, we learn about that is your liquidity zones as well, right? So these are zones that involve some sort of liquidity. And like I said earlier, you might not get this stuff right now because you haven't learned about liquidity since you are still at this stage of your trading journey, which you will learn about later, right? After you complete this course, next course you can learn about liquidity, right? And it's really the additional edge that you can add on to your arsenal that will actually help you perform better as a trader. Okay, if not, these are the liquidity zones. We learned that a liquidity sweep zone is basically a zone that swept liquidity before creation. In that case, you can expect price to react from this sweep zone and go, right? So same thing right here. This is equal lows. There's liquidity being built up below these lows. Price come down there, sweep the available liquidity, goes up there, create a market shift. So you can see this zone, it not only swept liquidity but also caused market shift. So we can expect price to pull back to this zone and then go. And then your flip plus sweep zone is pretty much flip zone. It's just that when it's creating that flip, right, during the failed reaction, it actually swept liquidity before going down even further. And once again, there's different variations of this flip plus sweep zone, which you will learn inside the liquidity course. Yeah, but let's flip plus sweep zone. And why this is so strong is because this is a zone that not only causes your demand to supply flip, it also available liquidity, it also causes market shift. So like I said, this is really the holy grail when it comes to institutional zones. This is really the best zone to be trading from. If you give me two zones, like give me a flip plus sweep zone, and you give me an ordinary supply zone, 9 times out of the 10, the flip plus sweep zone is most likely going to work compared to the normal ordinary supply zone that did not sweep liquidity, did not flip any zone whatsoever, right? So last but not least, we learned about trap zones, and it's basically these zones where it looks too perfect, like it looks like textbook scenarios where price is just going down, lower low, lower high, lower low. So there's no inducements whatsoever, it's just a straight down move like this. Then we can expect liquidity to be built up above this highs, and that is where we can expect price to actually come up there, sweep the available liquidity before going down even further. So all of these supply zone being created right here, they are most likely going to fail. Right. So lastly, we also talk about POI selection, how to actually select the correct point of interest. And I mentioned that the more confluences you have on a particular zone, the more confirmation that you have, the higher the probability of the zone working. All right. So always take note of that when you are choosing which point of interest to trade from. And you must really ask yourself, okay, did this sweep liquidity? Was there any inducements being built up right there? And did it cause market structure to break? Is it a supply to demand flip zone? You know, is it unmitigated? Is it part of a supply and demand chain? You have to constantly ask yourself these questions before you think about whether to trade that zone or not. And inside of the market, like I always say, I can't emphasize the importance of this statement. The market trading, it's never a game of certainty. That means we can never really expect these zones to work 100% of the time. Sometimes they will fail. And most likely it's because liquidity or the volatility of the market or market conditions, whatever it is, sometimes they will fail. Even this flip plus sweep zone right here. Sometimes what can happen is that even though this is the holy grail of the zone, price can potentially come up to this extreme zone, tap into it, and completely neglect this flip plus sweep zone and then go. Sometimes that can happen as well, right? All we do as traders is to try to increase the probability of us winning a trade through employing more confluences, right? The higher the confluences, the higher the chances of you actually, or of the zone actually working, and then of you actually winning the trade. So that's really all we are doing as traders. So when in doubt, I always want you guys to fall back to the basic boring fundamentals and always remember, never ever assume what the zone is gonna do. Right? Don't assume that the zone is gonna work just because it has multiple confluences. It can fail as well. Right? You want to react to the market, and how you react to the market is by waiting for price to get into your zone, right? Example right here, waiting for price to actually get into your zone and show your entry model, right? And then that is when you can potentially get in for your entry. All right. Never ever assume that a zone is gonna work just because it has a lot of confluences and it checks all the boxes in your trading plan. You always want to wait for confirmation. This is really the biggest mistake that I see a lot of you traders make, right? You guys are just rushing into the trade and you guys will start trading, and every single supply and demand zone you see in the market, and then it will fail, and then you lose money, and then you sit there wondering why do you lose money. It's really because you don't understand how to draw them in the first place, or you don't understand how to utilize them, or you don't understand how to identify the high probability zones. Alright, yeah, with that, I will advise you to go and rewatch the lessons when it comes to this institutional zones thing, because it's very important that you actually understand not just how to draw and identify them and how to trade them, but also how to combine them with market structure. Because when you can combine these two things together and then you add on the multi-time frame concepts, that is when you can really have like a full-fledged trading strategy, which is not complete, right? But it's somewhat good enough for a beginner, right? And later on, like I said, don't rush to trade right now. Just continue studying the lessons, continue learning. Later on, I will give you certain action steps that you will be required to take, like creating a mechanical trading plan and actually testing it out. And then that is when you can start trading. For now, be patient, my boy. Be patient, my friend. Trust the process, focus on the process, focus on absorbing the knowledge, the wisdom from these lessons, and focus on practicing and applying what you have learned onto the charts. And two things that I always tell you guys is what Bruce Lee said. Be like water, my friend. I don't fear the man who knows 1,000 kicks. I fear the man who practiced 1,000 kicks. One kick 1,000 times. Alright, god damn it, how can I mess up that quote? Anyways, yeah, that is institutional zones, and I hope that you have enjoyed this course module. It took me a lot of time to actually put together all of this stuff, and like I said, always go and follow the rules, the mechanical framework that we use to identify and draw and trade these zones, and really, you will not go wrong whatsoever. And with this, I hope that you have gained extreme clarity and confidence when it comes to analyzing the financial markets, combining this with mechanical market structure. Next, let's move on to
Let me have some food.
One love, prosperity, focus, constant and never-ending improvement. I haven't had any coffee because I don't feel like it. Let me get some food. Hit up this gym session later and just update a bunch of stuff that we're gonna be doing into the next week. Full focus, no surrender, 100 energy.